Just give me 1 second. Okay. So
Oh, maybe not. I think y'all should be able to hear me.
We're going to be going over a lot of things in spreads and a little Q&A as well.
Now? Okay. Yeah, I'm still getting the same issue. I gotta leave and rejoin. Oh. Wait, is G-Notes in here? Oh, there you go. You just joined. Yeah, make me. Yeah, G-Notes, give me a second. I'll invite you to speak. I think you can speak now.
Yep. Can you hear me?
Yeah, we can hear you.
Perfect.
Can you share your screen? Do you need me to share mine, or how do you?
Let me see. Yeah.
I figured I'd let you share your screen and handle whatever chunk you're going over, and then I can do so afterwards.
Yep.
And also, you're recording it?
Yeah, I have it recorded on you. I mean, I video. So yeah.
Okay, but yeah, pointers. I don't have to record anything.
No. Unless you guys want something on like your, platforms. I mean, I just have it on
something
YouTube.
Where we can send the YouTube link.
Yeah.
And it's fine.
Okay. Yeah, then we're good
let's
then.
Just do that.
Okay. You can see my screen. I mean, it's just a chart right now, but.
Yeah, I can see it.
Okay, perfect. Give me 1 second. You can see it switching.
Yeah, let me pop you out to my other screen.
Okay.
Because it's really small right now. Yeah, I can see everything. You're on like an Excel sheet?
Yeah. Okay, we'll give it a few minutes.
Right. Yeah, I can see.
I know you said your spreads have been doing good. How have they been going?
It's been going well. Still testing a bunch of stuff. Just because, just some stuff with like spread width and like how distant I'm taking them and stuff like that. So like, I feel like I'm still ironing out a few details, but it's been going well overall, like in terms of hit rate, like win rate and all of that. So I cannot complain.
Good. Yeah, I mean, it really is an amazing strategy, especially if you use it in the right way. And what I mean by that is, just using proper risk management and not trying to be. It's a strategy that I personally believe, not meant to be risky. You have the ability to be a seller and take advantage of, moves. Easiest way to put it is everyone's always buying calls and puts. We obviously have the opportunity to do the opposite too, and have the ability to have a higher probability of winning. Using a different strategy and just being smarter with those trades. If you think the market's just chopping around, or you think the market's going to stay up or down, you have the ability to do that with spreads. And I think that's something that's amazing. And honestly, wish I kind of learned sooner myself, but it's really great. And we'll kind of dive into that, go over the basics and everything and how it can definitely change, your trading trajectory, in my opinion.
Okay, Nick, I don't know if you have like a general spiel you go through, or if you want it to just be more Q&A. Otherwise, I feel like.
Oh, no, I'm ready to go. You want me to start now?
Yeah, we might as well. And
okay.
It's going to be recorded, so anyone that joins late, they can just watch replays. So
perfect.
No point wasting time.
Yeah, that sounds great. Yeah, I'll just kind of dive into it. So
yeah,
basically, we're going to be going over spreads, credit spreads, option selling, stuff like that. I'm really just going to dive in on spreads, iron condors. I'm going to show you trades that I took today, trades that I've took in the past. Obviously, what has worked for me, rules I use, and stuff of that sort. So, for example, today, I'm not going to, I'll go over what I did today in a few minutes because it probably get a little confusing just right off the bat. First off, option selling has 100% changed, my life. I was able to do a ton of things with the money I was making from option selling, in my opinion. It also just has totally changed the mindset on trading. It made me just smarter. It made me just a little more relaxed. Because you don't need a directional move with option selling, which is amazing. So while, people are buying calls and puts, and I'm not saying it's not a bad strategy because you could obviously make money doing that. And, I still make money doing that too. I obviously have my winners, I have my losers. Same thing with spreads. I have my winners and I have my losers. Anyone that's going into any specific strategy or any specific part of trading and says they're a god is not true. You're going to win and lose in anything you do in trading. It's just having proper risk management and truly honing in on that mental side and being able to just navigate a potential entry or exit based on what you know, based on your strategy, based on your risk management. Because the whole point of trading is truly, if you do not have risk management, there is no possibility for you to even take a next trade. Obviously, you're just losing money at that point, and sooner or later, again, you're not going to have the money to take that next trade. So basically, I'm going to dive into the basics here, and I'm going to make it as simple as possible. If anyone has any questions, please do let me know. Any specific place, Nico, I should look for these questions in the Discord? Because I also have them on YouTube too. But any specific place in the Discord?
Oh, they should just all be coming in on the stage chat itself.
Okay.
But like, I guess I can just voice them to you and you answer verbally if you prefer.
Oh, okay. Oh, I see that. Okay. I got it. Perfect. Yeah. So yeah, I see this already. So actually, let me just start right here. For spreads, you're going to need level 3 options, and you're going to need a margin account. I do not use the margin. And honestly, about 80 to 90% of the brokers don't even let you use the margin. It's needed to actually take a spread trade. So level 3 options and margin. I could hear you, Nico, so I'm unsure what's going on there. But yeah, level 3 options and a margin account. Now, with that said, let's kind of dive into what a spread is. And I'll give you guys examples. I'll show you guys, basically spreads I've taken over the past week. Over my past 43 trades, I have not lost a single spread, which is absolutely phenomenal. In the past 5 months, I've turned a $4,500 account into $9,000. So the possibilities are there. And I'm not saying that's something that's going to happen 24/7 with, anyone. I'm sizing, pretty decently. I'm using what I know in my 6+ years of trading spreads and my just about 11 years of just trading in general. I know what my risk is. I know what I'm willing to risk. I know what I'm looking to make in profit. And I'm waiting for that opportunity to enter my trade and execute on that strategy. So a put spread is a spread where you are selling a put. In this case, let's use QQQ as an example, okay? Let's use QQQ as an example. We're right here. QQQ closed at 603.60. Let's just make it 604 and make it simple. If I believe QQQ is going to stay up for the rest of the day, and obviously let's just make believe that also the market is currently active. So Q's is 604, and I believe QQQ is going to stay above a certain price today. I'm going to be opening a put spread, a put credit spread. So I'm going to be selling, in this case, let's say I sell a $600 put. So I get the premium from that $600 put, and then I'm going to buy a $599 put. And then it's going to be the premium from the sold strike. Well, let's say that premium is 15 cents. And then minus the premium from the bought strike. And let's say that premium is 5 cents. So the difference between those two, 15 minus 5, is obviously 10. Simple math. So that'll give you $10 per contract on a $1 strike wide option spread. Sorry. So because we sold a 600 put, we need QQQ to stay above 600. That is going to be our price that we needed to stay above. And we bought the 599 put to get that, collateral difference, that premium difference. You would need $100 per contract to open that trade because it is a $1 strike difference. And again, you would make $10 on that trade because of the premiums from the 15 cents minus the 5 cents equals 10. So that would be a 10% trade per obviously every contract that you buy. Now, let's say you sold the $600 put. So you still think Q's is going to stay above 600. Let's say you sold the $600 put again, but this time you bought the $598 put. So that's obviously $2 wide in the strike difference from 600 to 598. And so the first premium, again, the sold $600 put is 15 cents. Now, because the 598 put is a little bit further, obviously $1 further from the 599, the premium is usually going to be a little bit higher, or in this case, actually lower. And let's say it's 3 cents. So obviously 15 minus 3, you'll get 12. But now, for every contract that you buy for that spread, because it's $2 wide from the 600 to the 598, it's going to be $200 per contract to open that trade. So if you get 5 contracts, you need $1,000 to open that specific trade. But now your premium is 12 cents, so it's a little bit more, but obviously you have to put up, an extra $100 in collateral per option that you buy. Again, still pretty good return. You make just about 6% on that trade. So before I kind of continue, I just want to make sure, is there any questions on that? Is that pretty clear to understand? A put spread is bullish, and obviously, how the kind of strike differences roll into that collateral and how the premiums kind of work out. And if there's no questions on that, let me also check the YouTube too. Give me a second. Yes, I do post my trades. Yeah, that's a 0 DTE. I mean, I'm just using it as an example, but yes, I do. Mostly all my trades are 0 DTE. I'm just waiting to see. I see some people typing. I'll give it a second and then I'll move on to the next thing. And by the way, for my end here, it's just going to be like 30, 35 minutes at most. It's not going to be anything crazy. Any risk of assignment in the unlikely event of trade going against you? Of course. Now, with that said, I always have a stop loss, which I was going to get to, where I would only risk 200% of my premium. So for example, if I sell a $600 put and I buy a $598 put, okay, I need QQQ to stay above 600. And obviously, because it's a $2 wide, it'll be $200 per contract for me to open that trade. So let's just say I buy one contract. I open one contract of that put credit spread, okay? And so I'll need $200 to do that. My premium that I would make is $12. So my stop loss would be 36 cents, 2 times the 12, because 1 times the 12 cents would be 24, 2 times the 12 cents would be 36. And that is what I'm risking. So I'm going into the trade looking to make $12, risking 36. Does that make sense? I will never let it get close to assignment, because now let's just say, for example, okay, you Q's doesn't work out in your favor and you don't listen to that 200% stop loss. Now you're at risk of losing that $200 actually, which is the collateral of that specific trade. Yes, you could get assigned, but then you would need what, $60,000 for 100 shares of QQQ at 600. So yeah, for me, I always just done the 200%. It's worked really well for me. I used to do 250%. I used to have a little bit higher at 300%, but 200% is where I kind of found that, sweet spot. Let me just double check. Yes, you would need so for example, someone just asked a question, to place the credit spread trade, do we need the account balance to cover the max loss on the trade? So you would need just not the account balance more so, you would need the available trading cash to cover that amount. So if you have $500 available to trade, you could only buy 2 spreads of what we just talked about, because if you bought 3, you would be $100 over and it wouldn't let you. Just choosing a wider spread strike a safer option than tighter strikes prices. Sometimes I get better premiums, tighter spread. So the safer option is, I'll get to that. I will get to that, Janine, actually, because that's kind of where I'm going. Okay, 1 second. Let me just check this one more time. Okay. Yeah, of course. 100%. Again, ask anything. And by the way, if you have any questions after, we talk about spreads here, you could always DM me. And anyone in Asgard and my chat, or anyone who's been to these learning sessions, I mean, I will answer anything. There's no reason to hide anything. I want to see people profitable. I want to see people, obviously succeed. I always answer as soon as I possibly can if I see it, right away. So please do ask me anything. So now let's go to the call side. Call side is just the opposite. Now, call side, you believe QQQ is not going to get above 606. Again, let's just say the market's open. Let's say it's 604. You think QQQ is not going to get above 606. So what you would do now is you would sell a 606 call and buy a 607 call. Same thing. The sold strike is the price where you do not want that specific ticker or ETF, whatever you're trading, to go above or under. In this case, because we're doing a call credit spread, we do not want QQQ to go over 606. And it's funny because you think about it in this way. You think put credit spread, you would think it would probably be bearish. It's actually bullish. You would think call credit spread, you think it would be bullish, and it's actually bearish. So again, selling a 606 call and buying a 607 call, you want QQQ to stay below 606. Is that very easy to understand as well? Again, put spread and credit spread. I mean, put a put spread and a call spread. Very simple. And that's basically what we do a ton. Yeah, 100%. Okay, just double checking. Okay, nothing there. Okay, cool. So now let's go into an iron condor. Iron condor is literally actually something we did today. And it would be, you want price to stay in between, basically chop, or stay in between your 2 sides. So it would be including a put spread and a call spread. That is what an iron condor is. So let's say we sell the 600 put and buy the 599 put. And let's say we sell the 606 call and buy the 607 call. Again, $100 in collateral, just in general. Now, because we have 2 sides, does not mean we have to put up $200 in collateral now. It's still the $100 in collateral if we still do $1 strike wide on both sides of the trade. But The premium is actually going to be higher because you would be taking the premium from the call side and the put side. So let's say the put side is 10 cents and the call side was 10 cents. So now you'd be making $20 per contract on a $100 trade, which would be a 20% return on that trade, obviously, if profitable. And now, again, that's just an iron condor is a put spread and a call spread together. And then kind of want to go into some of my rules and then go into a couple of trades that we took so you guys kind of see what I'm looking at and how I basically do it. And then, I'll kind of dive into the strategy a little more then. More so right off the bat here, just wanted to go on to the basics. So kind of rules that I take. I do not take a trade before 10:30 a.m. Eastern, which is an hour after the market opens. The only time I take a trade before that time is if the market gaps up or down 1% plus, because the probability of the market closing below 2% or above 2% or below 3% or above 3% is very minimal, under 6% chance on both of those. For 3%, it's like under 2% chance. So I've actually not lost a trade on that in probably 3 or 4 years doing that strategy. Funny enough, this week the past 2 weeks, we had like 3 opportunities on that. And for some reason, I did not take the trade. I tried to penny pinch as much as I can and try to grab as much premium as I can. And it kind of backfired on me. That is one of my favorite setups when we got up or down over 1%. It's absolutely phenomenal. So the 10:30 rule, that 1% rule, FOMC, I do not trade spreads really. I have done it before. It's not really the best. The premiums don't really drain because obviously at 2 p.m. is where the market's really looking for a move. They want to see what Powell does. They want to see what the Fed does. So don't really trade spreads on FOMC really. And obviously tomorrow is FOMC. So that's another reason why I'm saying that. 200% stop loss rule, as we kind of went over already. If your premium is $50, you're risking 150 at that point. So here's what I tell people. If you were going into trading spreads, figure out what you're willing to risk per day. Everyone has different risk tolerances. Everyone has different amounts of money that they're trading with. If you are okay with risking $1,000 a day, then you should set up a trade to profit just about $500 a day, because then your risk will be 2 times that. That's always how I, relate to everyone. I basically, when they ask, what should I be doing, all that stuff, I ask them, okay, what are you willing to risk per day? And that's where we kind of get that answer. So 10:30 a.m. Eastern, I wait for that trade. No trading on FOMC, 200% stop loss. And then when I'm trading, let me pull this up. Give me a second. Yo, what's up? Ooh, what the fuck just happened? Hold on one second. I'm going to pull my screen back up in a second. Give me 1 second. So I'm going to go on a Robinhood dummy account that I have I think literally $2 in. Give me 1 second. And by the way, if you guys have any questions, please do put them. I will get to them 100%. So I'm going to show you exactly what I'm doing here. I'm going to use tomorrow's, let's do QQQ. Okay. Literally $2 in this account because I don't trade on it right now. I'm using other brokerages. Okay. Spread them. The timing is 10:30 a.m. Eastern, so 1 hour after the market opens. Okay, so I know a lot of people use Robinhood, or at least I'm just going to use it for this sake here. So I'm going to show you basically another rule and almost basically how to open spreads on Robinhood itself. It's absolutely amazing. Absolutely amazing way of trading. And I've been doing it for over 6 years. It absolutely changed my life. I was able to get rental properties, do everything that I, want to do. So this is giving me, I don't know why it's not giving me tomorrow's date, but we'll just go with that. Okay. Yeah. Cool. So here's QQQ. We're gonna do a put spread. Let's just do a put spread as an example. And here's what I want to show you. So, oh wait, let me just get my document here. Okay. So what I want to show you is how I choose the strikes that I'm looking for. Okay. QQQ currently is 603.50. Again, let's just say 604, make it simple. Every trade I'm doing with spreads personally is same day. And I'm usually doing NDX spreads. I'm just going to use QQQ as an example for this. And the reason why I do NDX and a lot of people also do SPX is because it actually gives you better tax benefits. So that's the reason why I do it. And plus, I just know QQQ and NDX. So I stick with NDX because I'm also able to get more premium and go basically kind of further out. Whereas QQQ, the premium's lower and you can't really go as further out as you can with NDX. So what I personally do when I'm trading spreads is I am looking at this number right here, as well as what's happening in price action. Okay. But I use this as well. So that's why I'm going to bring this up. When I'm selling a spread and we're looking, basically for Thursday expiration here, it's not letting me use same day, obviously, because the market's over. And I'm not sure why it's not showing me tomorrow's expiration either. But what I'm looking for is 90% plus probability of profit, chance of profit. You could also see that when you're looking at Delta on another brokerage. When Delta is 0.10 or lower, that would be a 90% probability of profit. When Delta is 0.07, that would be a 93% chance of profit. So whether it's you're seeing chance of profit on your brokerage or whether you're seeing Delta, that's exactly what you're looking for when you're selling that side. So let's say, for example, I'm going to click this one, okay? And I sell a 586 put at a 92.6% chance of profit, and I'm getting 41 cents on that. So now I'm obviously going to switch to the buy side. And again, we're kind of just mocking a QQQ spread here. And you can see how easy it is. Once you do a couple of these spread trades, you're going to see how quick it is to just navigate and actually plug them in yourself. So now I bought a 583 put. So I sold a 586 put, meaning I think QQQ is going to stay above 586 by Thursday. And that's over just about $17, $16, somewhere around there. And I buy the 583 put to collect premium. Now, sorry. So now, because this is $3 wide and strike, it would be $300 in collateral per trade. And then I would looking to make 11 cents. So it would just be about a 3% trade. And then if I was to change this strike from the 583 to the 584, you see how how it changes and how I only make 7 cents now, but I would be doing $200 per contract, still over a 3% trade. Is that all clear there? Does anyone have any questions on that just while I'm here? What's up? What about NDX versus SPX? What generally gives more premium? NDX gives more premium, 100%. Also, yes, that's actually a good thing I read this again. So a reason why I do NDX and SPX is they are cash close. At 4 p.m., they are done. It does not close you out. So it also, for people under 25,000 who are trying to trade spreads and are wondering about the day trade rule, when you trade NDX or SPX, and let's just say, it's going to close 100% profitable, you don't need to worry about it. Obviously, let's just say NDX, you sold $25,000 puts and NDX is at 25,400 at like 355. Obviously, barring something absolutely ridiculous, a 400 point drop should not happen. It will not waste a day trade because it's cash close. It just closes at 4. You get your full 100% profit, and that is it. So that's how you could avoid the PDT rule while using NDX and SPX. How much money do you need to use for doing this? again, that depends on, really who you are as a trader. I would say truly with spreads, I would really use at minimum 2,000 to 3,000. I would really suggest 5,000. Like account size is what I'm saying. I would really suggest 5,000 is really like a good starting point. I see we have some more questions coming in. So again, was that pretty simple on how that works? So again, I'm looking for 92% plus or 90% plus probability of profits. And then also, for example, we look at this, okay? Obviously, I want to use price action, in this example, because it's not just the probability of profit that I'm looking for. I am looking at price action. And for me, it's a lot of mean reversion trade. So if we are straight ripping up here, I'm looking for a call spread because I know at some point, and again, this kind of comes into those probability rules where, market closing over 2% is very low. Market closing over 3% is very low. So if we're straight ripping up from 598 or 597 all the way to 606, that's a $9 move. That's already a 1.5% move right there, or 1.4%, 1.5%, somewhere just around there. I am looking to buy a call spread because I know just off of data, just off of what I've done, I don't want to be buying a put spread because we have more downside that day possibly rather than upside. We're already up 1.5%. You look at probabilities over the past 50 years, the mean reversion trade works so much better. And again, this is, let me see if you guys can see this. So, okay, you can. Let me change it here. Give me 1 second. Okay, so here you can see, here's my $4,500 account or $5,000 account, which is now 100% return. I started this account on October 28th, I think. Yeah, October 28th. And it has been absolutely phenomenal. We did at the end of January have a little rough spot, and that was with Trump sending all that news at the middle of the day in our spreads. And it kind of kicked my ass. But the funniest thing is, whether it's chop or whether it's a volatile market, I have actually, my best trading came in 2020 and 2022, where we got those, obviously big red markets where obviously COVID was over 40%. 2022 was 18 to 22%, somewhere around there. And, right now with VIX over 20, I mean, it's been consistently 20 to 30. That's been really beneficial for the premiums because the premiums are now boosted. So just over 4 months of time, almost 5 months now, I returned over 100%, which is absolutely phenomenal. I'm averaging 14.4%, 92% win rate, and we are over 40, I think it's 43 or 42 trades in a row that I've not lost on. My last loss was on February 3rd, and now it's March 17th. And you can kind of see, the trajectory right here. And this is really what I tell people with spreads is they see the risk to reward. They look at that collateral number where you're putting up $200 to make, let's say $12. Where they're so used to seeing people, buy a call option that goes 500%, which doesn't happen that often, but I'm just saying, or at least people don't hold that often, for that, where they see that and they say, the risk to reward just isn't there. Well, again, you're not risking, well, you are risking 200, but I'm not risking 200. The goal is 200% stop loss. I'm risking $36 out of that $12 premium. And it's a compounding strategy. That's how I consider it. It's a compounding strategy. And this is a clear example of that. All these trades are documented. Obviously I have the broker statements for it too. I just don't share those specifically. I actually got hacked once doing that, which is absolutely ridiculous. And my Discord got hacked too. If people know me for over 10 years now. I had to make a whole new Discord account, and someone freaking hacked my Discord and made like a crypto pump thing. I have no clue anything about crypto, which is crazy. But spreads is in my opinion, a life-changing strategy. I know people that I've met in real life who have absolutely changed their life around from losing in trading to winning in trading just from spreads. So, if you have any questions on it, I do want you to ask me. I'm never going to shy away from answering anything. There's nothing to shy away from. I hate how people go online and just don't answer DMs and all they do is sell courses and all that bullshit. Like, there is so much that people could learn here. And I think there's a strategy that is highly underutilized by traders. And they don't even get to it because by the time they do, or by the time they would have, they already lost all their money just regularly trading or doing something stupid in that case. And I'll send that result sheet so you guys could see, and you can ask me any questions on that too. Does anyone have any questions? I see timing to enter the trade is important. Yeah, can you share your strategy? Yeah. So again, for me, it's really mean reversions, and it's really best if I'm doing this live. I do lives every day. I share them in Asgard every single day. So you could see that. I know on this day I got a put spread. I know yesterday I tried to do a call spread. I actually didn't get it. I took no trade on yesterday. And today I actually did an iron condor. And as you can see, it literally, after the morning pop, it did not do anything the rest of the day. In reality, Alvin, if you're able to check my lives tomorrow, or even just go back and see the lives that I do, you could see, around 10:30 to 11, why I'm entering that trade. So if you have any questions on that, Alvin, I'd love to. But I explained it here on what my strategy is, and again, it's so simple: just doing price action, mean reversals, and using the 90% plus probability to find my strikes. But really, if you wanted to see that, it would really be the best when we're live trading, and I could, obviously share that. You could see it happen in real time and what I'm saying now. Credit versus debit spreads. Yeah, debit spreads is more so you are looking for that direction. So for example, let's say you think QQQ is going to go up, okay? And you would sell, you would buy the $606 call, and you would sell a 608 call. Yes, because it's the opposite. Yes. So you would buy the lower strike and sell the higher strike. I just don't really like debit spreads. When I'm doing spreads, listen, I'm looking to collect premium. I'm looking to just have higher probability. So I stick with credit spreads. I've done debit spreads before, and I just like credit spreads so much better. Let me see. Hold on, what we have here. Nico, by the way, do you have any questions?
No, I don't have any questions. I'll probably give some extra comments.
Okay.
Just general things I've heard. So first thing, yeah, I think SPX, NDX being cash settled is going to be huge for anyone who's on a smaller account. Mm-hmm. If it is something where you still want to do SPY QQQ, or even if you're in a SPX NDX, always account for that you have 3 pattern day trades within a 5-day window. So those 3 pattern day trades are going to be very important because obviously it's a very high win rate strategy, but you're still going to have days that go wrong, right?
Yeah.
So anytime you exit for a loss, that's going to count as one of your pattern day trades. So if you ever have 2 or 3 losses within a 5-day period, you cannot trade until you get those reset, right? Because that effectively means any trade you take on the 4th day, you wouldn't have a pattern day trade left over to exit that position in case something goes wrong, right? So very rarely have I seen someone lose that many in a row, but it's always possible, right? So you always have to be trading in a way that's safe for your account. The other thing I'd also recommend is different brokerages have different rules around stop losses on spreads. Most times, if you have time throughout the day, you monitor this visually, right? And you do a manual stop loss once you start seeing that it's at minus 200%. If this is something you're going to do and then step away from your phone, for example, Robinhood, you can't even set a stop loss, right? Based on first spreads. So make sure you're using a brokerage that allows that functionality if it's something you intend on not monitoring all day, right? So I know some people will trade these while they're at work, right? Or even if different time zones, they'll do these while they're sleeping.
Yeah.
So for those, you need to make sure your brokerage allows that functionality, right? Otherwise, obviously you can run into some issues there. Yeah, I probably have some other comments I'll save for a bit later.
No, that was perfect. Yeah, I'll answer a few more questions and I'll just kind of hand it over to you. And again, if anyone has any questions other than that, always feel free to, again, DM me or anything. I put that little result sheet so you can kind of see the results and if you have any questions on that. But if you guys are free tomorrow, I'm always live for Asgard. So just check that out and you can see why I'm taking a spread and so on and so forth there. So someone asked, how do you determine with buying the higher or lower strikes? Like for credit spreads, do you usually buy the lower strike? Yes. So when you are doing spreads, let's say, for example, put spread, you always have to sell the strike that is closer to the actual price of the stock. And then you would buy the strike that's farther. When you're doing a call spread, same thing. You would sell the call side that is closer to the actual price, and you would buy the side that is farther. Let's say you grow an account from 5K to 15K. Do you usually scale your position size up to? Yes, I personally do. And again, this is where I talk about where, it matters on what you're willing to risk. So let's say you grow from 5K to 15K, and let's say you're making $100 per day. Let's say you basically, you 3 times your account from 5K to 15K, or 2 times, whatever it is. Again, me personally, I am sizing up, but now you just got to figure out, okay, are you willing to risk more? And then from there, you obviously decide on that. So if you were doing 1 contract, yeah, 100% could do 2 to 3 contracts now. Austin, same thing. Yeah. Well, when I'm on the account that I'm on now, hold on 1 second. Let me see here. So here's one that I've been tracking for a very long time. This has been, since November of 2024. I have 447 trades in that time, 86.4% win rate, and I've made 120, just about 2,000. Last month was my best month in February at $17,700. And I'm kind of getting up there. I don't think I'll beat it. And then January, where, I talked about at the end of the month, we were definitely having a lot of troubles with all those news. That was my second losing month since I started, basically tracking. So yeah, it was crazy. Let's see. So I got no more questions on that. Theoretic, EMS in the Discord said, wow, I can't even speak. Theoretically, is there a point where you would stop sizing up for any particular reason? Again, that really just relates to who you are as a person. Let's say you have $1 million and you make $1 million. It is up to you to really figure out where you want to, what is your risk? What is your risk for that day? It's like stuff like that. It truly is up to you. I do think at one point I will obviously stop, growing. So for example, when I turned the 25,000 into 728,000, I was using at most 100,000 per trade. And again, that's a lot. But I have been trading spreads for, again, a long, decent time, 6+ years. And I just kind of, I know what I'm willing to risk. And again, I'm not risking that 100K. I was risking what, I was looking to make. And I think at that time it was like 2,500 a day or like just around 2,000 a day. And I was willing to risk 4,000 to 5,000. What is a max loss of a call is 1.5. I'll put as well. Baba, do you mind stating that again? I'm kind of losing you on it. FC said, do you have any tips on managing drawdown, selling further out, or sometimes going long and naked? You could go long and naked. For me, realistically, on the drawdown, again, if I'm at 200%, I'm just closing and just moving on to the next day. And it's perfectly fine to lose, the trade. So for me personally, that's just me managing a drawdown or me managing my risk is just doing that and just closing it. Now I could possibly open another trade if we are continuing and I have the ability to go really far out. That would be, I would say, the way that I manage kind of the drawdown. I can make a little bit back or possibly make a little bit back. And then Alvin, how do you link your strike to Skylit? So this is actually a good question. I actually didn't say this in the thing here, which I'm going to do now. Can you notice a trend day to avoid? Trend days are fine. Again, I try to always do mean reversion, and I usually wait to see, some sort of price action that is, not going my way. So actually, I did use Skylit a lot today for this trade. Now, right now, obviously, market's done. So again, not the best, but we did have a lot of just kind of choppy zones on Heat Seeker here. And I like to have Trinity up. I like to look at SPY, IWM, and Qs. I don't really, well, I do check SPX too. But I usually have
Nick, there's a replay tool, right?
Yes, you are right. Right here.
You can also just go back to when you entered the trade to show the situation at the given time.
Yeah, let me do that. Thank you. I don't use the replay tool that much, so that is why.
I these, at least for spreads, I think it's pretty good. You show your thesis at the time. Obviously, I know like it's also paired with some mean reversion stuff and some different strategies that you do, but a lot of times whenever I do any trade breakdown, like that's a big part of it.
Yeah. So here, well, really I entered at 1103. This is 1102. So you could see IWM was kind of possibly showing something there at 251. You can see Qs sitting at 605, SPY sitting at 673, in between 672 and 674. So you could see we were kind of supported. And let's go back to 1103. So 1103 is, sorry, let me go to a 5-minute. 1103 is basically this candle right here. Now, yes, so we could have went lower, but here's what I was looking at. So obviously we had a lower high here. I got a call spread on NDX. Let me just do NDX at this point. I sold a $25,000 and 50. No, I sold a $25,000 and 80 call, which is 200 points higher than the high a day. And at that point, again, we were at 24,000, like 815, let's say. And I sold for the put side, a 24,480 put. And the lower day yesterday was 606. The lower day the day prior was 336. Oh, sorry, that's Monday. Friday. Yeah, the lower day prior was 606. So yes. So I was 100 and basically 30 points below yesterday's low. And at the low of the open, which was this candle right here, is 750, I was about 270, 280 points lower. Premiums were kind of low as well. So I took the iron condor. I was kind of expecting the market to kind of chop or at least support that lower side. And at this point of the day, we were already up, just about, well, at this time, being that we closed here, we were up about 0.6%. And at the highs, we were up over 0.9%. So, I was kind of thinking we wouldn't go higher. So I got the call side, and I wasn't thinking we were going to go that much lower, especially under yesterday's low at 606. So I got the put side too and making it a condor. And I got just about I got $97 per contract, 97 cents. And I opened 12 contracts. So I made over $1,000 on that trade. Oh, sorry. Yeah, I'm stupid. Oh no, they could see the chart here. Yeah, YouTube, I didn't change that. Sorry about that. Yeah, but in reality, that's basically how I kind of took a trade today. And again, if you have the ability to, come live with us tomorrow, definitely do. You can see exactly why I'm taking it right then and there, and I always kind of explain it. What do you think about weekly non-zero DT spreads and condors? Perfectly fine. I just work with zero DT spreads. It's just been something I've done again since I really started, and I'm just so used to it, and it's worked so well for me. Can you talk about your decision-making process between a put spread versus call spread versus iron condor for the particular day? Yeah, again, really live, so much better. But I kind of just did that a little bit. I was looking at the market not going higher. We were already up, 0.8, 0.9% at the highs. I was using, previous day lows, and I would always look at previous day highs as well and kind of use those as possible strikes that I want to go over and under for safety. And then again, looking at the probability of profit. So really EMS, yeah, if you're free tomorrow, 100% join in on that so we could, kind of dive into that. Yes, risk is the spread with, correct, Dixon? Yes, I was down. My max drawdown on this was about 60%. And then it just chopped and I made 100% on the trade. I think at most maybe 70%. Do I use a broker that allows stops on spreads? I do have Thinkorswim or Schwab, and you could do that, but I am always mental. I do not set a spread because, you can get an IV spike and it just take you out when in reality, there was no reason to get out of that trade. Any other questions? Sorry. Okay. Stuff for no. Yeah, and I've seen that happen with so many people. 100%. Again, always send me a DM. I will answer everything. Yes, I am EMS. Yeah, always send me a DM. 100%. I know I've said it 500 times already, but I will answer everything. I want to see people succeed. Okay, I got a last question here. When exiting for a possible loss, do you weigh more the price action whenever a spread trade goes against you? Okay, so someone asked me a question on basically we see the price of the contracts or the spread is at 200% or just over 200%, but the price action is still valid. So again, this is where, me as a mental, where I'm not using the actual stop loss, I may hold for 220%, 230%. And if I see that we are not breaking down in the direction that it would break down to, really knock me out of the trade, I will hold a little bit. And again, I'm in this case, I'm also on a 43 win streak. If I lose a little bit more than the 200%, it's, perfectly fine for me. And a big reason why I use that 200% stop loss is because if you take a trade and you lose, you can make that trade back and in profit within 3 trades. And that's exactly why I do that. Possibly even 2 trades. So that 200% is really key. Someone asked about Vanquish, which is a prop firm for actually option selling or spreads. What account size do I recommend? Again, that's really on you. 10K is probably fine to just get started for sure. How much does the market need to move to hit your 200% stop loss? Again, that also depends on how fast it's moving, the volatility and stuff like that. If there's any news, how IV is at that specific moment. So it kind of depends. Let's say for a news event where last week we had one with Trump, we were instantly down over 200% and we were still 300 points away because it was a major IV spike. There was a news and like a candle of 100 points, even though we were still over 1% plus out, it had a big spike. 100%. I'll send you that. Any more questions on that? Any questions at all? I'll pass it over to Nico. I don't know how much time Nico has. So if anyone has any questions, please feel free to DM me. And that's basically it. Hopefully that was easy to understand. Hold on, I see someone has one question. I'll wait for
I
that.
think Admiral has one last one.
Yeah.
Yeah, I'll let you handle this one, but I'll be sticking around another 30 minutes to an hour for anyone in Asgard that wants to ask any follow-up questions.
Yeah. So do I have a checklist for when not to take the trade? That's actually a very good question. That's a very good question. So, you know what? Actually, let's pull up. Let's do this. Let's do this. Let's do this. Let's do this. Okay, you guys can see my chart, I'm guessing. Let's pull up Qs. All right, let's pull up NDX. This is Monday. Okay, so Monday, you can obviously see we gapped up over 1%. Now, this is, again, one of those trades where I should be taking that call spread, you know, off of the first pop. And this is one that I didn't, so I missed out on that opportunity, sadly. And we did get a new spike, you know, end of the day with NVIDIA saying they were going to make $1 trillion in revenue, and the market, you know, ripped on that and obviously just dipped right after. At this point, just around here, I remember I was able to sell like a 25,050 and go that far out. I mean, with the NVIDIA news spike, it only hit 24,800. So we would have had, you know, no worry there. But right off the open, the premiums are higher. Again, we're gapping up over 1%. I would have been able to sell that 25,050, and I'm not sure why I didn't take it. I try to penny it and try to get as much premium as I can, and that kind of killed me on why, you know, obviously that trade didn't execute. But the rest of the day, I just couldn't find something that really worked out. I could have obviously did an Iron Condor now that you look at it. But I was really trying to do that call side because, again, we were up over 1% still, even throughout the whole day. And we just weren't doing anything, but the premiums were just dying. So it's really, I guess the checklist is the premiums, and I mean, that's a big one. It's really, premiums is really the biggest thing that kind of sways me in one direction. Like 30 cents for an NDX is really low. 60 cents to 70 cents is a sweet spot. You know, anything over that is really good. It's really just a premium. It's like yesterday's example. I just couldn't get in checklist wise, just not good premiums. And I wasn't able to go that far out after I missed that initial move. So I want to be able to go pretty far out and get, you know, 90 something % probability of profit, but also not be within 100 points. Whereas NDX could obviously move 100 points in one candle, and you could see it right here. So hopefully that answered your question. How do you use Heat Seeker? Yeah, I just use it, you know, obviously as possible support and resistances, you know, levels that, you know, the market could possibly go to. You know, just simple versions of what I'm doing, simple versions to add on to my Confluence for my own price action and the probability of profits. And that's basically that. Sweet. Yeah, you're welcome. 100%. Again, feel free to ask me anything. Nico, all you. And if, by the way, guys, if you are free tomorrow, you know, definitely check out the live. I always post it in the Spreads channel. I always talk in the Spreads channel. I don't really like to clog up anything else. Sorry, Nico. You're all set.
Yeah, no worries. I was just going to say, you have to, I don't know if you're going to stick around or head out, but.
Yeah, I'll stick around for at least another 10 minutes.
That I've seen. Okay, awesome. So let me see here. So in terms, someone asked about how to open them in Robinhood. Please DM me. I think I have an old video I can send you. What was that? BYE? I think he's still in here.
So yeah, guys, if you're interested in trading with us, you could copy trade my trades exactly right here.
So EMS, one big thing, especially for those of
so
you.
So we have 100% return, 92% win rate, and we just got that 100%.
Most times, you're still deriving a similar bias.
So if you guys are interested in that, I put the link in there. If you're interested in trading with us live, you can join us at BullTradeFinder.net.
Most times take. It's just that when you're
I'll let these questions kind of go through
legs, you're obviously then dropping and giving it a good margin, right? So either using the 90% or like basing it off the delta and the 90% factor that Gino's mentioned. Another thing you can do, which I'll share my screen and show in a second, is based on some of the nodes that we're seeing on a given day, sometimes ranges established pretty early in the day, and sometimes we can use that information also to set our sell legs, right? So I can cover a few examples on that, and I'm trying to do a few more YouTube trade examples. So I'll try to post, I'll do a chunk of those after this call and post those, and that'll just give a bit more logic, or so you guys will be able to follow the logic of how I'm setting some of these legs. Let me see. So yeah, EMS, any day where we have very big conflicting signs on SPX, SPY, QQQ, a lot of times iron condors will work very well. So example, today, yesterday, both of those were days that I sold iron condors because I could tell from very early on in the day that we're going to have sort of mixed bag, and that it was going to be a lot trickier to.
My favorite platform
like
for spreads is Schwab, right? Or Thinkorswim. But Robinhood is very good too. I use that a lot. Of this week, so Robinhood, Schwab, Thinkorswim, any one of those.
A lot of chop. So that
well, I just need to go get a trade.
Give me 1 second. Maps was giving me good confidence to sell iron condors. Yeah, oh, I think yeah, Gino's already covered that question. Let me see. And FSC, like I think Gino's already covered that. Like the whole point is you're having a defined risk, right? So the buying options, you have a capped downside and in theory, unlimited upside. Obviously, when you switch to the sell side, what's happening is you're capping your upside, and now you have, in theory, unlimited or very large downside in the case of spreads. If you're doing naked selling, it's in theory unlimited, right? The key there is, we have a very high win rate, but to keep our risk reward and like our win percentage and our average win and average loss quantities, and to make all that math work, it's a lot healthier to put a stop loss minus 200%. So then we never have to worry about incurring a max loss. Because what happens at that point is you're then risking a huge chunk of that collateral you're putting up is now at risk, right? So that's why we always are very big on that stop loss being used, right? And I've just defaulted to using the minus 200% stop loss that Gino's recommends, not just because I didn't have experience previous. So something I tested out on like a paper account for a while, found that it worked quite well, and then that's just the number I've stuck with. How do you link, Alvin? How do you link your strike to Skylit? Alvin, yeah. So if we have a trending day, so if you're able to catch the reversal in the direction of the trend, obviously selling an iron condor is risky because then you're going towards either extreme end. But if you're selling a call credit spread or put credit spread, that actually works very, very well. And I've seen sometimes you're up 90% within an hour, right? If it's especially strong trend. So the key thing there is you're still trying to derive a bias and make sure your entries match that, right? So the timing of entry, just think of it that way, right? If you're buying puts or buying calls anyways, based off some of the heat maps that we're looking at, just take that same entry, just sell a spread instead, right? So you sell the corresponding directional spread, but you're still playing that move, right? If you're doing a one-sided spread. Iron condors, I really only recommend on days that look very choppy, that you see conflicting signs, SPX, SPY, QQQ, and those are going to be the days that work a lot the best on those. What do you think about weekly? Yeah, so I've only done 0 day. The big thing I have about weekly is most times it will work, but in theory, I guess with 0 day, you always have full control over when you enter and when you can exit. Well, sorry, knocked my headset over. But in theory, if you do an individual spread or even an index spread, that's a swing. You could get some catastrophic news overnight, and that could give you, you could end up exiting next day at market open, and it'll be past that minus 200% stop loss. So that's the reason I've stuck to doing 0 days, just so I can have full control throughout the whole trade. Let me see what else. FSC, another thing I'll mention on, how much drawdown, if you want to get a grasp of how much is the usual drawdown for some of your entries, is just open up a paper account on Thinkorswim, or I don't know, there's probably other platforms that allow you, but if you open up a 10K, 20K account on Thinkorswim, let's just say 10K, right? And just practice and start seeing, okay, if I take a call credit spread, if I take a put credit spread, if I take an iron condor, and a lot of things you can play with there are, what's the difference between taking just a one-sided trade, so just a put or call credit spread, versus the iron condor, right? How do they move different, right? Another thing you can play with is the width of your spread, right? You can test out SPX versus NDX, right? So there's a lot of different things you can do there that I'd absolutely recommend anyone who's new to this go ahead and do that for a month or two, right? And there's nothing. You will only have gains, or sorry, like all the mistakes you may make with real money. It's better to just go ahead and do them on paper, especially with something like selling spreads, where it's, I've seen people, if you miss a stop loss, you can be down quite a big chunk, right? So it's always better to be cautious and make sure you fully understand how they work and how they move before you start deploying capital on it, right? Okay, I think, everyone put a lot of comments about the stop loss already. Let me see here. What other questions are there? Admiral, did that cover your question about how I'm using Heatseeker alongside those? Paulo, you're using Heatseeker for futures. Okay, Paulo messaged me. If you're interested in spreads, this is something separate. But yeah, if it's for futures, there's some other stuff I can point you to that'll help you learn it. I don't know how recently you joined. Yeah, one other thing I'll mention, and let me share my screen for this. Okay, Ginos, is there anything else you need to share? Otherwise, I can pull up my screen.
No, yeah, wait, let me take my screen off. No,
yeah,
I'm done now.
Discord limits. Okay, sweet. Appreciate that.
Okay, there we go.
Okay, so a couple things that are going to be very useful when you're doing spreads, whether you do NDX or SPX, is a lot of times, and this is mostly for people who are correlating over to Heatseeker, because obviously we only get levels for SPX, SPY, and QQQ. So obviously, if you're doing SPX, you can just see the levels. It's the same stuff. If you're doing NDX, I would recommend you use, let me try to pull this up. If you use this indicator made by someone in the server called OBEX, so if you come over here, go to indicators, if you just look up, I think it's just called overlay. Yeah, you should be able to find one that's, or I guess QQQ overlay. So if you use the QQQ overlay on top of NDX, oh, this is showing super, okay, one second. This is visually showing terribly. Okay, in pink, hopefully it shows better for y'all. But you can use these to correlate what levels you're seeing on the heat maps over to NDX, just so you're not having to like sit on a different website and like be spamming out those calculations through a calculator. Like there's SPX to SPY calculators, NDX to QQQ, etc. So it's often a lot of times either just get this indicator put up on your trading view, and then this is something that visually is a lot simpler after that. With EMS, with the Iron Condor, yeah, so I think Gino's covered this, but basically Iron Condor with the same collateral, you're now collecting premium on the upside and downside instead of just one side, right? So yeah, most times you will be profiting. I mean, it depends, but usually you're making, like, you don't always set like an equivalent Iron Condor. Like usually one side will be skewed and make a little bit more than the other side, depending on the strategy you use. Or sometimes some people will always just make sure it's even on both sides. Like today, I think today I collected slightly more premium from the downside than the upside. So it also just depends on the given day. Sometimes calls are very deflated premium wise. Sometimes puts are very deflated. So it kind of just depends on the given day. But yeah, in general, Iron Condors, from both sides you're collecting. So there's two things you can do. If you're collecting at the same distance, like if you're selling at the same distance from price,
but
as you would a call credit spread,
I don't use it 24/7.
You in theory can make up to double the premium, right? Because you're doing it on both sides.
Everything else is
but I've also seen,
I mean, again, if you watch tomorrow,
a little bit further out on each side. So they're then making like a slight bit more premium, but it's also much safer, and they're able to go a little further out, collect premium on both sides, and make either an equivalent or slightly more than if they were just doing a one-sided play. Okay. Admiral, your question about futures is how to trade Asia and London. Oh, yeah, I can handle that, Admiral. I think that's separate to this spread discussion. So let me just make sure. Any other questions regarding spreads? I can go over a few examples, but I think actually what I'll do is after I finish this up, I'll just record like a good 1 week's worth of recaps of just every day and what I did. And then I'll post those to YouTube so y'all can go through and look. One big thing I'll say on Iron Condors is the entry fill matters. So if you see any kind of like big reversal setting up on Heatseeker and you enter an Iron Condor right before, a lot of times you'll hold through some drawdown there. So a lot of times that'll be okay. but a lot of times it's smarter in terms of premium collection to wait for that big reversal to happen if we push to like either extreme and then open it up, because you're usually able to collect a bit more premium. So it's again, that's something I would suggest. You take a test period with a paper account, spend a lot of time testing a lot of that different stuff, right? Of when do you enter, what time, what legs are you selecting, and a lot of stuff like that. And that'll help give you a good grasp, because we can show a few examples, but it's same as with anything in trading, right? It's going to look very different day to day. So test stuff out on a paper account. Any questions? I think Ginos is happy to answer, but also send any more like heat seeker specific ones in terms of your thesis that you're building. Feel free to send over to me, and I'm happy to help out with that. I think actually, yeah, Dixon is someone who has huge experience on spreads as well. So I've bothered him actually with, with a few questions. Not to put you on the spot, Dixon. But like there's quite a few members in the community that do trade a lot of spreads. They just they're less active, right? Since these are more you're sort of spending less time at the charts, let's say, and with your brokerage, because you really just have to sort out, solid entry. And then a lot of times you're waiting till very late in the day to close, or even some people are just letting it expire into end of day. So, I feel like most people doing spreads are actually just less frequently on Asgard online. Exit liquidity. Is exit liquidity ever an issue if writing strikes too far out of the money? I mean, Protons, I haven't had an issue. I don't know if G-Nuts, if you're still here. I don't know if you've ever had an issue with that. The issue with going too far out the money is you're just not picking up any premium. But yeah, sorry, Gino's like,
yeah. No, what you were saying was 100% correct. So yeah, you could run into obviously not seeing that much premium. Exit liquidity when the strikes are too far. Yeah, I mean, I would put it this way. Let's say, for example, Q's, you're up. Let's say Q's is up $10 and you're in a put spread. I mean, yeah, the ask is going to be 1 cent. You're probably not going to get out. No one. It's not going to fill you. Whereas, NDX, for example, yeah, same thing. When you're trading NDX, and Dixon, kind of just said this too. SPX does have more liquidity, but when you're trading NDX, for me, everything is entering or exiting like right around the mid price. And it's a little more illiquid. So yes, there could always be issues. I've never really had one. I just always move my. Yeah, exactly. If it's 0 on the bid and a cent on the ask, yeah, just let it expire. You're making 100%. Barring something again absolutely crazy that happens, really end of day there or something. But yeah, I've never really had an issue personally. Like actually, like trying to get out of trade that like I needed to really get out of. No.
Yeah, Protons, I guess just to be on the safe side, make sure you're trading something that's cash settled, and then this won't be something that you really need to stress about, right? And yeah, with regarding the, I'd have to toy around with this a bit more. It's something I've been testing on like a paper account, but SPX having more liquidity, it often brings the like bid ask a lot more in line. So if you're starting out, that may be something that's a bit easier to trade, just because you're not having to like grapple with that extra factor of, okay, what's the bid ask and where you're setting your fill price, etc. So, and because for any of you on the heat seeker side, obviously that's something that you can directly look at the heat maps, see what levels are there and present, and sort of where we have volume and where we don't. And you're not having to go through those conversions I was mentioning earlier. So it's probably a little bit more beginner friendly to do SPX, but long term NDX, you obviously can collect a bit more premium with those. But there's that liquidity difference. So just things to consider and to know, right, as you're deciding sort of how you're going to set your system. how does VIX? So I don't know, a couple ways, right? Like if we have a very elevated VIX day, a lot of times what'll happen is you can get strikes much further out for a similar premium as on an average day, let's say. So if you're targeting the same, if you're just targeting a dollar value, you can often just have a much safer play a lot of times. Now, that's assuming that you know price is going to stay below or above a certain range, right? Or a certain level in case you're doing call credit or put credit, right? If you want to take the same legs as you typically would, you'd be collecting a lot more premium at that point. So I do know there's some people who would trade a lot of times when we have like VIX spikes. So a lot of times when news drops, VIX obviously spikes, so that we have inflated contracts for short term. A lot of times, some people will take trades at that moment and take advantage of that VIX spike due to news, and then once it drops back off again, they'll collect a bit of premium just from the VIX spike and drop, right? I wouldn't do that until you're very comfortable with these. And a lot of times, obviously, that's very dependent on news and all of that stuff. So there's never a guarantee of those opportunities setting up. But a lot of times, there are a few people I know do that. But yeah, Dixon has a good point. If you're tracking delta, that's a more repeatable system, right? Because the dollar value of a contract varies so much based on volatility and a bunch of other different factors, that the delta is really going to be it'll keep you in line and make sure you have a consistent process, right? Yep. Thanks, Dixon. All the help in the chat section. Any other questions? Like I mentioned, I'm gonna be try to throw together a few recaps today. But if you notice, a lot of, except for iron condors, but any call credit spread or put credit spread that I do a recap for, what you'll notice is my thesis is something that you could have easily played into with calls or puts, right? So always think of it that way. If you're doing if you have a directional bias, you can still, basically the vehicle in which you trade it can be different, but a lot of times for those of you who are sort of trying to decide when to enter a play, just try to look for the reversals you were going to play anyways, and then just play with the call credit spread or put credit spread, right? And that can probably be a good place to start for now, because I do know identifying choppy regimes and conditions is a little trickier. So maybe that's something you add in later on once you're a bit more comfortable with how these work. Okay. Yeah, if there's no other questions, I think we can end it here. And then, yeah, as you know, any questions, forward over to G Notes. I'm also happy to answer any questions as they come around. So yeah, just, lean on us if there's any confusion. But again, oh yeah, Admiral, I can handle that. I think G Notes is recording this, so I'll let him end that before I get into that question, because I know that's, and Paulo, I can also give you a bit of a breakdown on your question as well, but those are not spread related. So I do want to make sure we wrap that topic up before I go over to those. All right. Any other spread questions? Otherwise, I'm going to, I think, G Notes, we can probably let you go. I didn't mean to lock you up here that long.
No, that's fine. All right. Well, I appreciate it, guys. If you guys have any questions, please do ask. Nico, thank you for one, hosting, and two, also answering a lot of stuff and doing some nice feedback on that too.
Yeah, of course. No, thank you for being willing to share a lot of your knowledge base. And then when you, I guess, just post the link in the channel once you have it ready.
Sounds good.
Okay. Yeah, really appreciate it, man. Hope you have a good one.
You too. Okay, guys. Hope everyone has a good one. If you're interested in copy trading or trading with us live, btf.peakbot.com/sign up. And if you're interested in trading with us live every day, bulltradefinder.net. Everyone have a good one.